Good evening, everyone, and welcome. Thank you for joining us today for our live session, Mastering Gold from Market Insights to Execution. Before we get started, let me briefly walk you through what today's session is about. We will be covering a practical and structured approach to gold trading, from understanding the market perspective to applying disciplined execution. We are having today Abdurrahman Hamad and Jat Hayek from our customer support team, who will guide you through three things: key market fundamentals, how to read price structure, and how to approach execution using our platform tools. We will also leave time at the end to answer your questions and make sure everything is super clear. So let's get started, and I will now hand it over to Abdurrahman to begin the session.
Thank you, Nada, and welcome everyone for our session today about gold. So, going through today's agenda, we will cover the reality of gold in today's market. We will have an understanding of what moves gold, the trading setups that have high probability that traders should focus on. We will look at the risk and volatility management and the use of data to improve our trading performance and strategies. And we will wrap it up by a Q&A session. So starting with the reality of the gold market today, we've seen over the past couple of years that central banks have been buying gold at record pace, holding it in high reserves. We see that through China and India being the biggest buyers. And we see that happening for various reasons. The main one that stands out is obviously the persistent fragmentation due to geopolitics, the uncertainty that we observe in the markets, the economic uncertainty, the financial fear that we see usually drives people towards gold. And here's a fun fact for everybody. We looked at the data for 2025 across multiple asset classes, and we found out that gold generated the highest ROI of approximately 3,500%. So the demand for it is real. And as part of what we're seeing in the market, we also see that the yields have been unstable across fixed income products. And with that, obviously, we see a bit of volatility in the market. So this is the reality we're operating in today. So, and with that being said, we want to understand what really moves gold, because it responds to certain things. It doesn't move haphazardly as we sometimes might think. So the first response that we see is the yields falling. So when you don't receive money in your saving account or interest, and bonds stop paying lucrative interest rates, we see people shifting their focus from these products into gold. We also see at the same time, once that happens, weakening of the US dollar. And that's a byproduct of the next factor we look at, which is the expansion of liquidity. When central banks start injecting money into the economy to try and get it to be more productive, obviously purchasing power decreases, and the behavior we see from people is they look at gold and assets in general because they move up in price. And the final factor, and the one, in my personal opinion, that drives everything is the geopolitical risk that we see. The uncertainty just drives people towards looking for safe havens, and gold, being the all-time safe haven, is the product of choice. So the understanding we have here is that gold is sensitive to monetary expectations, not just headlines. So it doesn't just move because someone said something, but rather there are a set of micro or macroeconomic factors that play a major role in that movement. So the current structure we see in the market today, or we have observed at least over the last 2 years, was that we're seeing higher highs and higher lows. People buying the dips nonstop. As we see, there's a pullback, more buyers come into the market anticipating the next high. We see news volatility spikes over the past few months, you've seen that there is uncertainty, there is political instability, economic warfare. We saw that in 2025 when Trump started imposing tariffs on China and the rest of the world. The shift went from risk assets like stocks into gold. And with that, we see breakout and pullback patterns in the market dominating. So we see highs, lows, prices moving sideways and trading within tight ranges. So what we can conclude from all of this is that the movement is not random. This is a structured price action movement observed in the market. So we've mentioned that there are a few setups we want to look at. So the first one is a breakout with momentum. And to help you understand what do we mean by a breakout, essentially think of yourself being stuck in traffic and there's traffic building up. All of a sudden, we can see that the pressure is building as traffic slows down, and you can only move sideways to try and get ahead. So that's what we mean by a breakout. And essentially, once traffic eases and traffic moves very quickly, the we see people driving normally. So with gold, once it stops moving sideways and the pressure builds up, the price moves up. And there are certain factors, or rather not factors, but there are certain things we look at. So we see consolidation happening, which is what we highlighted as a buildup. Then we see a macro catalyst affecting it. That could be news, that could be Fed decisions, that just drives the price up. We also observe a breakout of psychological levels, the support and resistance levels that people envision are broken. And then that's confirmed, obviously, by seeing the volume of trades that happen. So to simplify it, you see some compression, and then you see a stop in the buildup, and you see the liquidity release and then momentum. You should always trade with the momentum, follow the momentum, not try to trade against it, because most of the time what we've observed is that people lose when they do that. The second setup that we look at is trend trading. So what we've observed here is that you can see the price moving in a certain direction. It could be moving high and then pulling back, and then higher and then pulling back. Or it could be a downtrend where it's trending lower, then pulls back, and then continues the same trend. We see a few things there. We look at the time frames, to try and do that. We wait for the retracement. And then once we identified our support and resistance levels, we should ideally enter near the structural support level. And the key factor in doing that, again, because we are anticipating momentum long term, is that we do not try to fight the trend, but use it as our friend in doing so. That can be summarized in impulse, a bit of a pullback, some absorption of liquidity, and then continuation of the trend going upwards. A few things we need to remember now when we're trading gold: that it is a very volatile product. It can generate significant returns, but it can lead to significant liquidations if we do not respect its behavior and understand its structure. So some of the things that we know is that gold can move 20, 40, 60, 70 dollars within minutes. That can generate profits or liquidate you depending on the position you're at. It can pull back and reverse sharply. So we need to keep that in mind. We need to have appropriate risk management in place in the form of take profits or stop losses. And we should be cognizant to the data that is out there in the market. Rather than just trading blindly, we should follow the news to understand that if there are reports coming out, like the non-farm payrolls, that might have an impact on the market, and you are better off positioning yourself accordingly. So what do smart traders do to deal with this volatility? They understand risk, so they identify the thresholds that they are looking to profit off or lose when trading. That could be 1 to 2% per trade. They identify the position size correctly. We've seen people lose a lot of money because they don't understand the position and its impact on their equity while trading. They should avoid over trading. This is something I'm guilty of myself, is when you see the trend going upwards, you keep opening positions. And if the market pulls back, you end up being liquidated. And finally, trading requires a lot of planning and discipline. It's not just a matter of opening the position and looking at the chart, but you need to understand risk. You need to position yourself accordingly. And once you've had a setup identified and you follow that structure, you are going to benefit. But if you don't, you end up paying a hefty price. And with that, I will pass on now the mic to my colleague Jad, who will walk you through some of the tools we have on our client portal, along with a view of the MT5 platform and how can you practice risk management. So over to you, Jad.
Thank you, Abdulrahman, for the insights. Now I'm going to be going through the client portal and the trading platform itself that you can use while trading with Gamma Capital. Just a moment while I get my screen up. So as soon as you log into your account, the main dashboard that will show up will show you your trading accounts, your balance, your equity, as well as the leverage of the trading accounts. You can view your deposit and withdrawal history, as well as the open positions that you have at the moment. You can also view your demo accounts. Other tabs that you can go through are your profile for your essential information that you provide to us once you sign up. Through the My Funds tab, you can access our deposit and withdrawal options. Generally, deposits, it depends on the exact method it is, but we do have instant deposit options. Other deposit options may take up to 3 days to reflect on your account. So it caters to your specific needs. We also have several withdrawal options that are servicing our global client base. You can also do internal transfers between your accounts. So as you can see here, we have 2 trading accounts. We can do an internal transfer for them through the client portal. In general, the client portal is designed to give you control over your trading accounts while being user-friendly and eventually fast as well. That's also very important. Here you can add a new account. You can view your account information. If you change your password, all of this is available through your client portal. Now, for the sake of brevity, I'm not going to go through every single tab that we have, but some important ones for today's session would be the technical view section and the economic calendar. We have partnered with Trading Central, which is a recommendation provider which gives us insights produced by their team of experts, as well as AI analysis that they conduct. The purpose of this is to provide you with an educational foundation through which you can start trading. So this is not certain. In trading, it's generally navigating uncertainty. However, making informed decisions from this kind of analysis does a traders in their trading with us. Since we're talking about gold, I'm just going to show you the Trading Central recommendation for gold today. Based on their analysis, they believe that they have pivot level at 5185, which means at that level, we might be looking at taking positions. If it's below, we might look to short, and it's above, we might look to buy. Now, again, this is only a general commentary over the market and is not intended to be specific trading advice because it eventually depends on your goals. So as a trader, you would look at this and you would also look at your own research and then make an informed decision regarding the position that you want to take. You will see that you have several tabs depending on your specific trading styles. If you are looking to trade throughout the session, you might look at the intraday tab. Otherwise, you can see your daily and your weekly tabs for longer time frame trading. Through the economic calendar, it's also very important for traders to be aware of the important economic announcements. I've set my filters here to high importance economic events coming out of specifically the United States, because we have seen that these have the biggest effect on gold. So important ones such as the PPI, we can see the jobless claims, the non-farm payrolls, for example. These are all going to have an effect on the price of gold in that specific session. And because there's so much liquidity coming out of the United States, you will see big movements on gold in their trading session. Another important feature for the specific purpose of gold is the market buzz feature. Here you will be able to see the mentions that gold has had in specific sources that Trading Central use. So these would be reputable news channels, economic journals, specific social media accounts and websites. The mentions of which are going to be displayed in this bubble format, so you can see, for example, that gold has the biggest mention frequency in the commodity space. So once you see, for example, silver growing in mentions, you might expect more volatility and more important news coming up on silver. Now I'm going to take you to our trading platform so you can see how exactly you can place your first trade and apply some of the principles that Abdurrahman was talking about. In the Trading Platforms tab, you will see that several devices are supported, whether it be Android, iPhone, your Windows PC, or the web browser itself. Since I am on Windows, the preference would be to use the Windows application instead of the web browser. As soon as you open the web browser, I'm going to share the screen now. Sorry, as soon as you open, as soon as you open the trading terminal, this is what's going to come up. You will be able to choose your broker. In this case, it's already preset because we've downloaded it from our website. After you click on next, you will be able to connect your account and log into it just like so. Now, as soon as you load up the platform, you're going to see in the Market Watch section, your default is going to show up the Forex pairs, because the MetaTrader platform generally is at the start of it. It was started primarily for Forex trading, and then it grew to be one of the most popular trading platforms in the world. So just an OD out to their starting, they have the Forex pairs loading up first. I'm going to press hide all now because I don't need to see them at the moment. Just a bit of background about MetaTrader 5 itself as a platform. This company, MetaQuotes, first released the MetaTrader 4 platform, and that set the standard in Forex trading. First, it was released in 2005, and the MT5 was released in 2010 with advanced community support and some updates to the client interface, as well as additional features. Millions of people, traders, use the MetaTrader 5 platform every day. It's adopted by thousands of brokers. Even brokers that have their own trading platforms, they usually offer access to MetaTrader 5 and MetaTrader 4 because traders have a preference for MetaTrader over the proprietary systems that are created by brokers. And the third-party ecosystem on MetaTrader, which we will explore towards the end of the session, also makes it one of the really powerful tools for trading and for community engagement for traders. As soon as you open up your MetaTrader, you're going to see the Market Watch, Navigator, and Toolbox. These are the essential windows that you need while trading. The Navigator is less important than the Market Watch, which is when it comes to access, when it comes to placing trades, this is the one that we really need. So as soon as I click to add, there's more than one way to add the symbol. One is by going and just typing it in as so. So the ticker symbol for gold is XAU, and the ticker symbol for silver, and the ticker symbol for silver is XAG. These are derived from their periodic table as elements. To open the chart window, I can simply right-click and open it up, and I'll do like so for both of them. So if I minimize them, you can see that they appear here. If I maximize one, it's going to appear like so. And I can have them side by side as soon as both are open. You can have them side by side, just like that. Now going through the toolbox here, you can see this account has a balance and an equity of 50,000. In this case, it's the same number because there are no open trades. Through the exposure tab, you're going to see your exposure in your positions. So this is going to tell you how much of a particular symbol you're trading, and we'll look at this now. An important one is your journal, as well as your history, through which you'll be able to see your account history. If I go to my network tab here, I can choose which server I want to use. Now I notice here that I have a ping of 218 on this server and a ping of 117 on this server. Generally, the lower ping you have, the better it is. And just like this, we've switched our server. We want it to be as low as possible to have the fastest possible execution. We've set up our servers in 3 continents worldwide for our global client base to be able to have a good connection wherever they are in the world. Now I will come to place my first trade on gold. So I will minimize the silver chart. I will maximize the gold chart, and I will place my first trade either by double-clicking here, or by pressing F9, or by activating one-click trading. Now, when it comes to which method to use, it depends on your particular trading style, what you're comfortable with. Different people might have different preferences here. When it comes to gold, there's something important here to discuss first, before placing our first trade. We want to look at the specification of gold just to understand. First of all, the contract size of what you're trading is very important, because that tells you how many units of this particular asset class are there in one lot. So when we say one lot, that means a volume of 1. And a volume of 1 of gold. In the specification, you will see that includes 100 ounces of gold. If each ounce is priced at 5178, if I buy 1 lot of gold, for every $1 price difference in gold, I am either gaining or losing $100. It's important to understand this point because, as Abdurrahman was saying, when you respect volatility of gold, it means you need to respect your position sizing, and you need your position sizing to go with your account size. So if I am risking 1% per trade with a $50,000 account, I need to understand what's going to be my risk, my reward, and what margin I need to open that position. So on 1 lot of gold, I would need, with the leverage of this account and with the current margin rate, I would need around $13,000. Now, the position that I will take will be relatively conservative for an account of this size. I will start with a 0.05 position. Now, looking at the general market trend, it's difficult at this point for anyone to say, oh, I will buy, I will sell, I'll make money for sure. However, just for demonstration purposes, here we will go in with a sell position on gold. I'll activate, here I'm using one-click trading, so that disclaimer that came up, it just asks you to confirm whether or not you want to activate it, because it can be tricky to use. And there we go. So as soon as we've entered that position, we can see our P&L changing. Since it's 0.05, for every $1 change in gold, I am losing or gaining $5. I also want to show you on the silver chart, and I'll have them side by side for this. I will have just like so, side by side. I want to zoom out on the time frames just to show you that you can observe, just when you set similar time frame and similar zoom out, you can see a general that they generally move in a correlated manner. Now, this is not very clear in this particular example, but if we look at the higher time frame, there you go. You can see that they move to kind of together, but it's not an exact one-to-one copy. So what I'm going to do on silver, and because the contract size of silver has 5,000 ounces in it, I'm just going to go with a 0.01 position. Again, I'm being very conservative. And here I'm going to buy silver, even though they generally move together. It's just for the purpose of demonstration. I'm going to have these positions. Now, to calculate your risk to reward ratio, you would set your stop loss and take profit according to the ratio that you want to go with. Generally, people use a 3-to-1 ratio. You can have a 2-to-1 ratio, even ratios that are better. It depends on your specific trading strategy, your position sizing, and your tolerance for risk. Now, I will set a stop loss here for our silver position, so I can modify that position, and I want to take profit. If I'm buying, I have to take profit. It's going to be at a higher price, and I have the stop loss that's going to be at a lower price. And there I would have set it. And for gold, if I do the same, I want to close at 5,150 and at 5,2. Now, the purpose of this is just to show you some ways that you can manipulate your take profit and stop loss levels. It is as easy as dragging it on the chart. To view your ratios, now you would have ideally done this before you place your trade, but this information is going to be available on the trading platform just when you hover your mouse over the specific stop loss or take profit that you have set. Some other important information that you can see, for example, in your exposure. Here you can see your position equating a positive volume of 50 ounces of silver. That means I have 50 ounces bought in the market, and I have 5 ounces of gold sold. On the journal, you're going to be able to check your execution history. For example, here you can see that this trade was done in 138 milliseconds. This is something that's important when you choose your broker, to make sure that their execution is as fast as possible, as seamless as possible, and as close as possible to your requested price. Through your history, you're going to be able to see the previous trades that you have placed on this particular account. In this example, we have some Bitcoin positions that caught a take profit. You can see the date that you entered, the date that you closed it, and the type of operation that you had. So for now, given the scope of this session, we will conclude at this point. For future sessions, we will be going in depth in terms of adding indicators to your charts, in terms of running expert advisors, and more control that you can have over the trading platform. It's a very powerful tool that we are happy to present. And we now open the floor for any questions that you may have. Okay. So if there are any questions, now is the time for them. Is there any six? Not yet, but considering that the last platform was released in 2010, I wonder if MetaQuotes do have that in the work. If so, I think it's going to be a very impressive platform. Abdurrahman, are you aware of an announcement for MetaTrader 6?
Not as far as I'm aware. We have been with MT5 since 2010, as you've highlighted. Any other questions? Is it a good time to buy gold? Well, given the uncertainty, and we can't give financial advice, unfortunately, the trend seems to be that everybody's moving towards gold. So you might want to follow the trend, since we talked about trend trading, and invest some in it. But that all depends on your financial goals at the end of the day. How can you open an account with us? Well, you can just go to our website and register, and then you can complete our onboarding process and open the account immediately. It's a very fast, quick process. As long as you have your ID handy and you fill in your details, you can have your account opened within minutes. We've just shared the link on the chat. In case you're interested in opening an account tonight, you can just register there. And our team will be more than happy to assist you with the process. You can just reach out to us, and we will be more than happy to take you on the journey and go with you step by step. Unfortunately, we do not provide any financial advice, so you do not get an advisor. But you do get an account manager that will follow up with you on the market. You can discuss the current trends in the market, and they can also help you with anything related to your account. It's a dedicated account manager that will be assigned to you the moment you open the account with us.
So if you don't have any more questions coming in, I want to thank everyone for their time, for their attention, and for their participation. It's been a pleasure to guide you through this webinar. Keep tuned for future webinars where we'll be discussing more advanced topics. And I just want to wish everyone a good evening. Thank you for joining us.